Ladies and gentlemen, welcome back to the channel. And in today's video, I want to talk to you guys about some of the most famous names in fintech, all showing off breaking news. So, SoFi to start. Well, we ended up seeing that the Wyndham Rewards debit card has officially been launched. This has been corroborated by both Wyndham Hotels and Galileo. Now, what we learned was a lot of details around what SoFi was actually doing a part of this partnership. So they're doing all the card issuing, the processing, which is both normal for most accounts, but also the Cyberbank Digital, which was their acquisition of Technisys, meaning that we're starting to see a lot of cross promotion with one of their acquisitions that they did very recently, just back in 2022. Although SoFi Bank is not a part of this, although they could be doing the card issuing or program management, it's actually been offset over to Sunrise Bank. Now, Wyndham Hotels has recently talked about the total addressable market for debit cards. They said, we're actually seeing a lot of younger people, particularly Gen Z, actually prefer debit cards. They said that we don't want to not have a product that sort of excludes them from earning points, which gets them free nights and extra stays at their hotels. So, although the credit cards can be much more useful to them, they still are sort of cutting out a large portion of the population by not having a product that suits this niche. So, how big is this niche? Well, going to the Federal Reserve's numbers here, and for some reason, this is the 2024 figures that they end up showing, it only goes to the year 2022. So, still, we're taking the numbers for both credit cards and the combination of both debit card products, both non prepaid and prepaid debit cards. On the left here, you see all the transaction amounts in their total value. So, the amount of money that's been sent through these in terms of trillions of dollars. And then on the right, you have the amount of actual transactions in the billions of dollars. So to help actually read this, I put it into a couple of charts to see the total size. So in terms of total transactions, credit cards make up for about 35.2% of these, card present transactions, whereas total value actually makes up for about 56%. Meaning if you just look at the numbers, people are putting their larger, much bigger expenses on their credit cards versus their debit cards, particularly like hotels and resorts, right? It's definitely credit card favored. But that could also be because there has not been any sort of rewards given to debit cards, or at least, not more than 1% of all debit cards have any sort of reward to them at all. They're just a way of spending out the amount that you have in your accounts. And this is why. Debit card versus credit card interchange fees. This is the amount of money that financial institutions will charge whenever your card is tapped on a terminal, inserted, or swiped. Okay. The amount that you're actually going to get charged is much, much less on debit cards, which means that the banks and then the also co-branded cards, whether that's airlines or hotels or whatever, can have a much smaller cut of the total amount because there's only so much money that can actually be processed. Now, there's additional fees to credit cards, right? If someone goes ahead and puts money on their card and they end up not paying that back, well, that's money lost to the institution. You really can't lose any money on a debit card because it's always prepaid in some form of another. So you have no way of losing, well, that credit. But if those credit card companies can then issue cards to people that they don't think are going to default, they can get away with charging more while saying that it's a riskier product when actually you're simply just making much more than you would a debit card program. And that's been true across the board. Now, you will be earning points. You will actually get the gold level membership status, which will then offer you bonus perks. You'll get a small bonus thing for signing up, as well as an annual bonus for holding up this debit card. And there actually is a monthly fee, $6 monthly fee to have this debit card. But if you have a balance, an account balance of $2,500, that $6 gets waived. So here's my opinion. Overall, I think that if a person is going to these Wyndham hotels a lot and they do not want a credit card, there is a potential reason why they want to sign up. Now, the potential monthly fee on this, I think, is going to be the big blockade. The people who are not signing up for the credit cards are clearly people that are trying to avoid any additional extra charges that might occur to them if they simply forget a payment or something like this. If you forget to top up your debit card to that $2,500 bonus, that debit card might be something that you then later regret that you signed up for. Although the total addressable market for credit cards is leading Wyndham Hotels to have 114 million plus rewards members, I do not think we're going to see an equal amount of this in the debit card side, even though the total addressable market for debit versus credit is equal, or relatively equal, I should say. Regardless, let's go back because we have more SoFi news. So Alexis Ohanian here, hopefully I didn't butcher your name, said that TGL regular season facts are in. The total TV audience that they ended up pulling for TGL for the first season before playoffs was 19.3 million users. Okay. 42% of the audience is what they call the advertiser coveted ages 18 to 49 demographic, which is the youngest in sports, tied with the NBA. In our final regular season match, Tuesday, the 4th of March, TGL set a new season high record for match day online video views of 7.14 million, and they're not done. Now, the benefits to TGL, if you don't know, SoFi is actually partnering with them and to such a state that they've actually changed the name. TGL is TGL presented by SoFi. And you can find their branding literally all over the casting desk, the where they shoot, all over the entire stadium. In fact, the stadium's actually called SoFi Center. So is this leading to higher website traffic? Well, January and February are showing both being record breaking numbers that potentially this is working. If you look at it on a quarterly basis and just take the average of the last 2 months and assume, the average of that for March, that is what is going to bring in for Q1 of 2025. Next, we have Robinhood. More breaking news, very exciting product launches, and it's leading the stock up 5% on the day. Okay. What we end up seeing is that the gold era, which is their month of putting out new products and promotions, is now showing off a 2% account transfer bonus for people who are actual gold members, meaning they pay $5 a month. However, this comes with some stipulations this time. If you are going to transfer this to get the 2% bonus, you have to keep these assets that you've transferred into the Robinhood brokerage for at least 5 years and keep your gold subscription for at least 1 year, which means $60 to them for having that $5 bonus each month. And as well as your Robinhood brokerage, the amount that you transferred, which could be any amount, has to at least sit in there for 5 years. According to Robinhood, the 2023 match promotions had already paid off. The payback periods are around 1 year for 1% and somewhere between 2 to 3% zone for the 3% matches that they ended up doing. Okay, so if it's 1 year for 1%, this means that it's going to take 2 years to pay off this 2% account transfer bonus. But you have to keep your money in there 5 years. So there's a lot of talk online about these being unsustainable and they can't just be dishing out tons of money to be bringing on these customers. Well, that's not what the financials are showing. They're actually dealing with this very well. And if people are keeping them in here for 5 years, and that's actually a 2-year payoff period, plus they're going to have to keep gold as well, the payoff period might even shrink even faster. And this is something that they essentially do not have to ever stop. They can keep doing this until they have the largest market share in financial services. Now, in other Robinhood news, we have way better news. Listen to this. Robinhood launches Predictions Market Hub. We knew this was coming. We didn't know it was going to be coming this early, March 17th. Holy crap. So today, Robinhood Derivatives announced a prediction markets hub directly within the Robinhood app. Customers will be given the opportunity to trade on the outcomes of some of the world's biggest events. At launch, the hub will allow customers to trade contracts for what the upper bound of the target Fed funds rate will be in May, as well as the upcoming men's and women's college basketball tournaments. So they're getting back into sports. Well, this was really interesting because Robinhood just was halted due to the CFTC saying, you guys can't be getting into the Super Bowl betting contracts. You're getting into sports. We don't really like that. But Robinhood said in this report, they said the predictions market hub and corresponding contracts will be initially available across the United States through Kalshi's Exchange, a CFTC regulated exchange. We have been in close contact with the CFTC over the past several weeks and look forward to continuing to work with them to promote innovation in the futures, derivatives, and crypto markets. So hopefully they got the okay. Kalshi said, our team has been up since 4:20 a.m. working to get every single March Madness game listed after Selection Sunday. The Robinhood engineering team was also working with us to ensure a smooth launch at market open. We did it with elections. Now we're going to do it for sports. Together, we're going to change the world of finance and trading. Welcome to the show, Robinhood. I love this from Kalshi. What it also shows is that one, their team is very hungry to show off these new products, but also Robinhood is right there with them. They have some of the best engineering teams in the entire space. And if they're staying up till 4:20 a.m. working, to do this, I just can't see a lot of the other stocks and companies, even potentially including SoFi, doing that. They'd probably wait till 8 a.m. the next morning to finish it and get it done because they don't seem as excited to launch products the way that, Robinhood would. Maybe that's just a personal opinion. Don't sue me. Breaking news from Affirm: stock is down 10%, at one point actually dropping nearly 15% on the day. Absolutely crazy. And this is because Klarna dropped news that they are going to be available with buy now, pay later in the OnePay app in online and physical checkouts of Walmart. Okay. And they also said that they are going to be the exclusive partner for Walmart, and that although Affirm used to be there, they will be removed coming later this year. And Affirm said that they, with Walmart, represented about 5% of their gross merchandise volume. So this is a big slap in the face to Affirm. They've lost one of the largest retailers in all of America, and they are actually going with Klarna ahead of their IPO that is coming later this year. But ladies and gentlemen, hopefully SoFi rolls this into many more hotels and airlines and bringing this co-branded debit card to the rest of the world that does not potentially want credit access. Robinhood is doing what Robinhood always does, pushing out the most innovative products and not making you forced to use it, just making sure that if you want access to this product, it's available within the Robinhood app. Absolutely beautiful. As for Affirm, it's the one name I don't own on this list. I feel bad for them, but maybe their moat is not as strong if people can price just potentially a little bit cheaper. Thank you all so much for watching. Make sure you hit the subscribe button, but bye for now.